Okay, so just to review my process, I look at the structure. If it's a Friday, Monday, I'm looking at the high and low. If we open up inside of Friday, still looking at structure. But when Monday and Tuesday have traded, that initially gives us our structure for the week. And that might be a Friday, Monday, Tuesday, could be a Friday, Monday. Monday might be the high and low, and Tuesday could be inside of that range. But then we look at the high and low of each day. That sets the initial trading range for the day, the timings for the 3 sessions, Asia, London, and New York. Then the 3 things that markets do: they break out, they pull back, and they trend. So on a Tuesday, we could extend the range of Monday, or it might, as we saw on some of the pairs, and we might get a false break reversal. And we'll just add the E in there, I noticed that. Or we might be in a trading range where the market's just trading between Friday, Monday, high and low, or Friday's high and low, or Monday, Tuesday, high and low. So 3 things that markets do. Then we look at 3 pushes. Each session will typically have 3 pushes. You could have 3 pushes in both directions, 3 pushes to the high, 3 pushes to the low for that initial high and low of the day. Whenever the market starts to push or break out as they expand the range in London, again, if I'm looking for a buy setup, there might be 3 pushes down before we get the buy setup. It might be a breakout, pullback, 3 pushes into the trend, into the breakout for the continuation. It might be a false break reversal, which we'll look at as well. 3 pushes, and then engulfments and pin hammers in that 12 candle window. It's a 1 bar stop, and I'm looking for 50 pips. The trades I'm looking for are where they're locked in. I'm not looking to try and trade every move. I'm looking for the trade setups that lock in this criteria. If there's major news, I want to know that I'm not getting in front of it. If there's major news, I want to know that I can come and look after the news, depending on the timings of that news, especially in the U.S. session, for an opportunity for this trade setup after the news. And then I just manage myself, being patient and focusing on just execution. I'm looking for one good trade. Again, just reminding traders, tonight is the great debate with Adam Webb, Nicholas Bovell, Anthony Crudelli, Ryan Paisley, Rolf Schlottman, and Blake Morrow. If you want to save your spot, just click the link. I've included it in the description box. They're going to be discussing all things markets. And I think you're going to just pick up a lot from these guys. There's a ton of knowledge that will be in the room. And I think there's just going to be probably a bit of humor and a bit of enjoyment, but also just an opportunity to hear from traders and hear what their approach is and how they see the markets. So save your spot. Click the link below. That's tonight. So we just step back and take a big picture look at the template. We talked about the up template, the down template. We have our Monday separated by the pink line. We're just obviously going back and looking at review. But before the week even starts, we should already have an idea that if they come back inside of this range, we have lower highs. We have lower highs for not only parts where these trades can fail, but we also have geometry for potential measured moves if the market moves back in this direction off of 1 push, 2 push, 3 pushes. Monday, Tuesday, our initial balance. Monday's trade was a measured move, 3 pushes into the peak sideways, but we also had 1, 2, 3. That's a 33, and our lower middle structure for now an up template possibly. And we trade it, or I trade it with that in mind. So I'm looking for buy lows after we come off the high. The market consolidates inside the peak formation low with 3 pushes, and it doesn't break through and continue down. It works its way back up before breaking out through the high again with a buy low setup on Thursday. But point being, even if the market just moved back up towards this high, we have a bias as we're trading on the Tuesday. Monday, Tuesday, they flip the book, but Monday's high now becomes our measured move target for the week off the low of the week. And we can extrapolate from there. The market broke through that level, so now we're possibly targeting a second full expansion of that range. If we look at the pound Canadian, again, we have an anchor point high on the Thursday. The market stays inside of Friday. On Monday, we break back inside of the box. The market moves up towards the high of Monday before buying low and breaking through in a trend trade through the high of Monday to continue up through the high from Thursday. And again, higher lows for an ascending triangle breakout over the course of the first 2 days after working into Friday's peak formation low without taking it out. We have geometry. The market breaks through the high of Thursday. We have a rectangle possibly for a measured move. The market breaks out, pulls back, continues the trend, works its way on top of Thursday's high before continuing to break out, pull back, and continuing the move. The three things that markets do. The pound, we have again similar to the other pairs, Thursday's high. Okay. Market trades on top of Friday, breakout, pullback, consolidation, gives us our double bottom reversal on Tuesday for our three pushes down. The W formation before breaking out, pulling back, stop putting back inside of the breakout and continuing the move. Just showing the different variations and using Friday, Monday, Tuesday, Wednesday for our initial balance and how that plays out over the week. We had the market break back inside on Monday, came back in towards Friday's. This high-low is just basically a big box. It's a box, and the market pushed back into the box before pulling out and continuing and breaking out of Thursday's high, pulling back and continuing the trend into a peak formation high on Thursday for the 33 sell-off and the straightaway on Friday morning in the Asian session. Now we're looking at gold. So same thing. We have the high from the previous week. Our pink line is Monday. The market breaks out from Thursday's high, pulls back on Tuesday with three pushes down, one push in the Europe-London session, one push, two pushes, three pushes, stop hunt in the US 12 candle window before resuming the move through the high of the week and the high of the previous week before consolidating and again three pushes down into the trend before continuing the move. Doesn't matter what market we look at. We could look at oil. And again, the market had been making new highs in oil as we headed into the new week. The market takes out the previous week's high. I'll just zoom this down a bit. Market takes out the previous week's high on Monday. Monday, Tuesday trade, we establish our high and our low for the week. And then we watch to see how the market trades, and we have a thesis. We're up high or we're down low. But there's our high and our low. The market works its way down on Tuesday into the low before pulling back inside. The market is inside on Wednesday before hitting the high. They hit it a third time. They go into consolidation on Thursday. Again, the Asian range is set. Okay, we're at the high of the week, near the high of the week. There, same thing. Consolidation, breakout, pullback, continuation on Friday for the measured move down with three pushes into the low and a reversal heading into the US session 12 candle window. We have middle structure. We have measured move. We have a peak formation high and a reversal in the US session for a measured move back up towards the high of the week. So it doesn't matter what what instrument we look at. When Monday, Tuesday have given us our initial balance, we can extrapolate from that information. You know, this is a great example of a trading range, but over the course of Tuesday, Wednesday, Thursday, pushed up three times into the peak formation before consolidating and reversing and taking out the low of the week. Trap traders in one direction, trap the volume, shift the market. Drag them down lower, chasing the trend, and reverse it stop hunt back up inside of traders who were short off the initial move down. So we're looking at the pound New Zealand, and just going back over our criteria, we're looking at Monday and Tuesday. We have our initial high and low on Monday. The market breaks out on Tuesday and pulls back inside of the range in the Asian 12 candle window. We have a middle structure. The market, just to go over a couple of things, we talked about the hourly phenomena. This pin hammer is the first candle of the second hour at the equities open in Asia. So we have a 1, 2, 3 down and an engulfment. And this 1 hour candle with this engulfment forms a pin on the low. It takes out Monday's low, but then we get the pin hammer, the first candle of the second hour. So if we're going to see something like this, very high probability that it will happen at the high or low of the week, and it will happen on a Tuesday or a Monday. Monday takes out Friday, Tuesday takes out Monday, whatever that may be. But false break reversal, the market comes back inside, takes out the high of the day, which is our lower pattern within a pattern. We have a rectangle, horizontal. The market pushes through, pulls back inside, and then continues its move back through the initial breakout of the high. So breakout, false break reversal, breakout, pullback, continuation. Our initial target then, when it's the low of the week and it pulls back inside, the first target is the high of the day. It breaks through the high of the day, pulls back, and heads into our next 12 candle window, continuing the move. So again, if we have a structural bias and we have a false break reversal, our next target is the high of the week, which is the previous day's high on a Monday, Tuesday. Breakout, pullback, continuation. So we're looking for a buy low setup. So we have our first hour is a breakout of the range. It's a bull candle. And when the market opens up in the second hour, we have a 1 bar pullback into the move and a bull pin candle at the second candle of the second hour. We also have an inflection point high. We already have established that we're in a breakout pullback continuation for a trend trade. Our initial target where this could expire is at the previous day's high. That bull pin hammer continues the move, pulls back at the end of the 12 candle window before breaking out. And again, having a bias, we're in a trend trade now, even heading into the US session. So second hour, we are in a trend trade, breakout, pullback, bull pin, second candle. Okay, if we're going to reverse, we have an inflection point, we have structure, we have a trend trade, breakout, pullback, continuation. The market goes into the 12 candle window in the US session. 1, 2, 3, 4. The first hour is down, and then we get a 1, 2, 3 stop hunt into the trend on top of the structure, the geometry for the high and low of the week in a trend trade, which is our first trend line break. Okay, so trend line break, retest of the high, 1 bar stop, traders back inside with the trend continuing its move. The initial trade in Asia is textbook perfect. Engulfment, false break reversal, engulfment, pin hammer, after the engulfment, stop hunt, back inside of the range for the measured move. So we have geometry for measured move target on the first trade setup, which takes us outside of the previous day's high. But we also have structure now for traders if they want to follow this trade for a bigger range measured move if the market proceeds to break through, or if they take profits, they can have a bias for a measured move target if this trade continues to move higher over the next few days. In terms of buying low, the market may induce us long off the high of the day and then put 3 pushes into the move, but this is a textbook perfect situation that meets all of our criteria for a 50 pip or more best trade setup. The pound Canadian was a fantastic example of a textbook perfect trade set up yesterday. We had structure in place already from earlier in the week. We were in a long template, an up template. The market broke out of its Monday, Tuesday high-low for a measured move over the course of the week to continue that long trade. We come into Friday's session knowing that there's news on the calendar. Last night was Canadian unemployment. So again, Canadian unemployment at 8:30 a.m. New York Eastern Standard Time. Knowing this in advance, we know that there's a possibility to monitor this pair for a news catalyst type trade. Again, we establish our high and low during the session in Asia. The market in Asia trades down lower before breaking through the initial high of the day as we head into our Europe London 12 candle window. The market breaks out at the end of the 12 candle window with three pushes, one push, two push, three pushes, before stop hunting down back into the move, 1, 2, 3, engulfment, and then the news candle. Fantastic catalyst. The news candle prints. We have an inside bar, but we have a bullpen hammer engulfment after the engulfment candle. Traders had an opportunity to either enter in at market or fight for a better fill price when the market pulled back. Regardless, either of those trades netted traders 50 pips with the trend. So again, trading with the trend, news catalyst, we had structure, we had a high-low, we had a initial break through the high of the day, taking in other time frame traders, breakout traders. Some traders would have been taking profits, but we had three pushes to exhaust that move before going 1, 2, 3 back into the original trade that traders may have taken from London, engulfment, and then a pin hammer on the news. So we wait for the news. The market gives us a pin hammer. We look at our 50 pip target. We're at the high of Friday. Obviously, structure may not have given, if traders held on for more. The market hasn't gone there yet before coming back and hitting traders at break even. But we got our 50 pip move, and we've had 4 days of rise. So news catalyst, locked in the low. They put the pin through the low on traders who got in early before the news, before shifting the market for 50 pips. And one last example, we're looking at the pound Aussie. Market has been making new highs in an up template. We have the Asian session taking traders and breaking to new highs before heading into the Europe London 12 candle window. So the market has given us a low of the day. The market has continued to move higher, triggering other time frame traders into the market. Breakout. And Europe London, we get a pullback. We get one push before it pulls back, two pushes into the trend, and then a third push, 1, 2, 3 down before we get an engulfment, 1, 2, 3 up. So we now have our third push down. We have a breakout of that range. We have a high and low structure for the session as we head into our next 12 candle window. The market breaks through the highs before coming back, 1, 2, 3 pin hammer into the original breakout after one push, two push, three pushes. We get a breakout pullback, pin hammer at the first candle of the 12 candle session. So we have structure for a measured move. The market proceeds to auction higher in that first hour. Now these four candles together form a bull pin bar in that first hour. The first candle of the second hour is a bull pin hammer, pin bar, whatever we want to call it. Stop hunting traders who are in on the initial first trade. So we talked about an engulfment. By the time this fourth candle closes, we have an engulfment of the last bear candle down after the breakout pullback. and then the pin hammer, which is the stop hunt on the trader who's got the trade right. So traders had two opportunities to enter this trade. The first bull pin at the first candle of the hour, and the second bull pin the first candle of the second hour. So again, 50 pips. Measured move of the bottom structure, or just a 50 pip target. Friday night, taking the market up 50 pips. This market was locked in. They built this structure over the course of the day. One push down, two pushes down, 1, 2, 3 down, breakout, pullback, continuation for a 50 pip move. This is worth waiting for all day, knowing that they're setting this up after they bring it up high to sell it down at the open of the session. Keep it simple, traders. Stay disciplined, stay focused. We're going to see the exact same trade setups next week. They might be going short, but they're going to be very similar. We're going to see breakout pullbacks, breakout false break reversals, and trading range trades. But I would rather take one solid trade that I know they've locked it in, and I've got a high probability that the market's going to move 50 pips, rather than trying to trade all this chop back and forth, wondering why it's not going anywhere, when what they're doing is taking traders in up top, hitting stops, trapping them going long again, hitting stops, getting traders chasing the moves, jamming them in, and then shifting the market and taking it away from the trap volume. Have a great weekend. Enjoy the great debate tonight, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.